sustainability is like a tag. It's like a green coat I wear and then say what a wonderful boy I am. I'm wearing this green coat. So why CEOs were not there in this conference? They are the ones who should. Because they don't see value here. And when do they see value in sustainability is perhaps when the analyst call talks about these issues. And this panel is about what responsible investing is and how the responsible investing can change the things. The net value of a company is really not reflected by its financial numbers. There's a lot more which goes into making a great company, and perhaps a lot of people know about it. But now this is becoming more and more systematic. We will explore this area of responsible investing, that how to look into the governance issues, how to look into societal issues or environmental issues when you are investing, and what are the problems about it.
A little bit of context. From an accounting for sustainability perspective, it's one of the Prince of Wales's initiatives. He set it up in 2004, and we work with all parts of the finance community. So my perspective is very much from the work that we do around the world, so global, but particularly with some of the CEOs, CIOs and chairmen from a lot of the large financial institutions. We also, of course, work on the corporate side with the CFO community. So it's that interaction between the capital markets community and companies that we spend a lot of time focusing on. And what I felt was very noticeable is how immersed a lot of the CEOs from these global banks, from the global asset managers and stock exchanges, pension funds and other asset owners really were around the sustainable investment agenda, what the drivers are, what the need is from an investment perspective, and what they as organisations are starting to do and what more they need to do. Even a couple of years back, if we were to have had that same conversation with some of the same types of individuals, I think the conversation would have been very different. It would have been about responsible investment, but not about how they really think about all of their flows of finance and where the mainstream is really being directed.
First, I think from a risk perspective, that if you don't pay attention, that it can lead to a regulatory risk, it can lead to a reputational risk, an operational risk, not investing enough in the safety of workers. It can lead to a business risk. From a duties perspective, you have a duty towards your shareholders, to your regulators, to the local community. From a return perspective, I think it's a complete myth, and maybe later we can discuss more in detail. The companies that are better in terms of their ESG scoring, are they performing better, both in terms of the return on equity or both in terms of the market capitalization growth, they are actually doing better than the rest of the set. So, I would say the value system, that is also very, very critical, that why the business exists. It is, I think over a period of time, as there is more awareness among the society and that there is with the social media and other thing, every business will have to get the societal license to operate. I mean, you exist for the benefit of the larger part of the society, not the other way around. And I think as the new millennials become a larger buyers and larger investors, I think the way they associate with a brand, what it is doing to the climate, what it's doing to the future generations, how they are building their business, as they become a bigger voice, whether as a consumer, as an investor, as in different roles.
From a more local perspective, what we've seen is that while the government has been showing increasing and clear commitment to actually develop this growth, in a manner that's sustainable, we are seeing enough corporates, increasingly, I would say, being focused on this. I think where the big gap still is, and an area that's still being developed, is the financing, to back this intent and the sort of the project pipeline that the governments and people are envisaging. I think in this context, sustainable finance, especially areas like green bonds, social bonds, green loans, these are a big area that are sort of waiting to be tapped. Jessica talked about. I think we've not seen that tapped very effectively for India specifically, but I think also generally for Asia, I would say, I think we've just touched the tip of the iceberg.
I think that the kind of questions that are emerging only underscore the fact that sustainable investing needs, particularly in India, investors to understand much more. Sustainable investing is not ethical gloss. In fact, sustainable investing is financially material. Sustainable investing basically imbues the belief that profitability, responsibility, and sustainability are indeed compatible. Sustainable investing has been around for the last 30-40 years, but in its initial phases, it was primarily followed through exclusion screens, where investors would not invest in companies such as alcohol, cigarettes, gambling, weapons, etc. But in the last 10 years, in the last 15 years, since the United Nations principles of responsible investing have come out, the responsible investing strategy has gained a lot of momentum, a lot of traction.
The cost of managing funds is a major issue with the fund managers. So responsible investing, when you are investigating the kind of a company, what the policies it follows, whether it has got carbon footprints or water footprints or whatever, or whether it has been attending AGMs and responding to the questions raised in AGM and all those things. So whatever you do for responsible investing, it costs money. So the moment it costs money, it improves the value of the company.